And as we know on the show, we love low float stocks because you get a bunch of buying coming in and the stock can just shoot to the upside. Shoot to the upside. Shoot to the upside.
Just when I thought this guy couldn't get any more clownish, he surprised me. Welcome back to Strongman Personal Finance. So Stephen Van Metre here, Mr. Penny Pumper, who gets paid a lot of money to talk about garbage companies. Why? Because he's a money grubber. He recently promoted another stock that he was compensated for $25,000 to talk about. What was this company? Now, a lot of companies that are really small and they don't make any money, they need cash to survive. And what they'll do is they'll advertise themselves to unsuspecting clowns or gamblers. And the gamblers will go ahead and buy the stock because somebody they trusted, an influencer, talked about how that stock could potentially go to the moon. And what happens, or at least I predict will happen to the vast majority of these companies, is that they will use this opportunity to pump the stock price to either dump shares that are held by owners or issue more shares at a higher price so they can sustain their operations for a longer period of time. Is it legal? I don't know. Is it ethical? Absolutely not, especially if you promote this kind of stuff for compensation. Now let's look at what old Stephen Van Metre talked about today. Sponsor does not influence AFA to recommend products or services issued by Beyond Canasoft Enterprises Incorporated, NASDAQ BCAN. How much was Stevie Wonder here paid? $25,000 to make one plug of this company on March 5th, 2023. Now, what's this stock all about? Well, we are Canasoft, our stock and our story. Now, without knowing anything about this company, you'd be like, okay, it's a weed company, whatever. But if you scroll down, what is this? What is this? What does that look like, ladies and gentlemen? Oh, baby. The revolutionary device for treating X problems using CBD oil. Oh, baby. I wonder what this product does. So Stephen Van Metre has literally stooped so low that now he's promoting a penny stock that's a cannabis company that also has vibrators. Now, if we go on stockanalysis.com, we can read a little bit more about the company. They develop, market, and sell customer relationship management software products. Okay, that's interesting. It owns and markets Benefit CRM, a customer relationship management software product that enables small and medium-sized enterprises to optimize day-to-day functions such as sales, blah, 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 blah. So it's CRM software, okay? As well as manages the construction, licensing, and operation of a cannabis farm and indoor cannabis growing facility. It is based in Vancouver, Canada. Now, apparently, they're getting into the you-know-what toys market as well. Now, let's go look at the financials, because Stephen Van Metre has a history of promoting stocks that have terrible financials. Now, he made this video, he published a video on March 5th, 2023. Now, if we go look at the stock chart, okay, the last trading day at the close, it was $2.41. Stephen makes his video over the weekend, and kaboom! This morning, it pops up to $3 per share and then collapses. I wonder what drove that pump in price. I have no idea. Now, if we go look at the financials, we can see that this company is an absolute stinking, disgusting turd. Okay? First of all, their revenue in the last quarter was $230,000 Canadian dollars. That's not that much for a company that you want to potentially invest in, okay? Very, 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 very small company. And it has year-over-year declining revenue growth. They actually do have a positive gross profit, which is shocking. I guess those toys that they sell are actually pretty profitable. And, of course, they have negative operating income and negative net income. And if we look at their margins, they're in the negative 100s, okay? Negative 303%, negative 142%. Free cash flow margin of negative almost 600%. Now, if we go look at their balance sheet, we can see they have $3 million of cash equivalents, and they have total current liabilities of $270,000. So right off the bat, at least my initial impression, they're not going to go bankrupt imminently. They have enough cash to pay off their short-term debts, okay. We look at their long-term assets, they have a bunch of goodwill and intangibles. That's interesting. What is that from? Is that a goodwill or is that intangibles? If that's goodwill, basically this company acquired another company for more than the fair value of its net assets. So they have total long-term tangible assets of basically 1.4 million, and they have barely no long-term liabilities. So overall, the balance sheet so far looks pretty good. Now, let's go look at the statement of cash flows. We can see that they are burning cash from operations and through capital expenditures every quarter. Last quarter, they burned roughly, it looks like, $1.3 million, $1.2 million, $1.3 million from operating and investing activities. So if you're burning $1.3 million every 3 months, and then you only have $3 on your balance, or $3 million on your balance sheet, you're going to have to issue shares pretty imminently to replenish that cash balance because you're not making positive operating cash flow and you are selling or buying assets, okay? Let's see if they did anything else interesting. Okay, capital expenditures. Looks like I don't even know what happened here. Apparently they bought something and then they sold something. Very interesting. And they have other investing activities. Something happened here, I'm not quite sure. But we can see overall the financials aren't looking pretty. They're not looking pretty at all. And eventually, when they run out of cash, they're going to have to either borrow money or issue shares. And I wonder what their goal is. Because now it's March 6, 2023. Remember, their balance sheet, this is 2022, September 30th. This is 6 months ago, basically. Look how much cash they're burning. Operating cash flow and investing cash flow. They're probably running low on cash unless they've changed their profitability very recently. And I wonder what they're going to do to raise cash. I don't know. What do you think, Stephen Van Metre? You think they're gonna, I don't know, I guess magically become profitable and make all your fans 10x money? Or are they gonna screw your fans over? I don't know. We'll see what happens in the future. Cheers!